Well, traders, they are heading into a busy week of earnings and economic data with tech companies and more banks set to report this week. We've also got a lot of housing data that's out in the coming days, and we're going to hear more comments from the Fed here. But Sozzi, if there are a few things as we continue to move forward over the course of this week that we should be paying close attention to, one of the huge things that I'm going to be watching, even as we're taking a look at some of those companies and the logos corresponding up here on screen, is really kind of kicking off some of that tech talk here. The first read on the tech trade amid this earnings season. And then for additionally, what we were seeing, and I was going to point to one of the logos a moment ago, but we've got IBM on the tech front. That's really, thank you so much, one of the AI OGs, if you will. As much talk as there is about artificial intelligence and where that can be woven into some of these stories that each company is telling in terms of their own growth narrative. That's going to be interesting to see what IBM has to say, of course, given the fact that they launched Watson, I think back when I was in middle school or high school. So that considered, you're also going to have Netflix. They've got some password sharing and the subscriber counts that are going to come into focus there. And then lastly, on the tech front, of course, Tesla with some of the price cuts and even on the production and delivery numbers that we did see come through for the first quarter, going to be a larger question of what kind of tone they strike with regard to those price cuts and if there could be more in the future if they're able to maintain profitability, and investors certainly going to be watching for the maintenance of that and the retention of that profitability as well.
No, it's a great insight, Brad. I'm going to refrain. It's so hard for me not to provide a little nugget on each, but I don't want to throw just a chaos into it. I can't. I'm going to start with, real quick though, P&G. I'm very interested. We've seen a lot of talk about inflation coming down, but prices at the likes of Target and Walmart for a lot of the stuff that P&G sells, like shave care, are expensive. Schlumberger, very interesting to me as well, as OPEC, following those OPEC cuts. Curious what that company has to say. But overall, Brad, it's important, I think, to remember, let's zoom out and keep in mind what you are overall should be looking for this earnings season, because you can very easily get lost in minutia for some of these results. How is moderating inflation impacting the financial statements? How does guidance look for a lot of these companies? Are companies still laying people off? And then lastly, are companies, how are they spending their cash in this environment? If we are going into recession, are they investing in CapEx? Are they raising their dividends? Are they buying back stocks? All things you should be watching for.
And it's interesting, the health of the consumer that we've heard about from the big banks as they kicked off the earnings season, that could start to continue to show up, or at least continue to show up, rather, in United and American Airlines. Their reports that is set to drop this week as well. Worth watching after we had seen Delta report last week, and of course it was a miss on both the top and bottom lines. However, it was really the guidance that they were providing going forward. So a larger question of if some of those larger travel trends are set to really continue to move, or at least be a tailwind for companies in United and American Airlines, and we'll see what kind of tenor they strike this week too.
All right, one more for you. Taiwan Semi, TSMC, very important off that Samsung warning a few weeks ago, and Micron name to watch.